Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Coming up on the show, IMF Managing Director Christine Lagarde says market swings aren't worrying, but wants reforms. And the Bank of Baroda plans to exit from South Africa. Plus, Ryanair seeks pilots in South Africa to fly expanding fleet. We'll get the show started now with the markets and starting off here on the African continent, the Nigerian market and the South African JSE index were trading low at intraday, down 0.83% and 0.10% each. Egypt was up 1%, while Nairobi closed in the red on Friday, down 0.24%. In the Middle East, Saudi Arabia's stock market rebounded today as global equities and oil prices regained some strength after last week's tumble, but other Gulf bosses moved little, with Qatar's index restrained by its biggest bank going ex-dividend. The Saudi index climbed 1.33% at intraday as petrochemical blue chip Saudi Basic Industries added 1.1% and Al Rajhi Bank gained 1.6%. In Dubai, the index edged down 0.17% as amusement park operator DXB Entertainment, the most heavily traded stock, fell 1.6% after reporting its net loss widened to 1.12 billion dirhams last year from 485 million dirhams in 2016. In Qatar, the index was down 0.63% as Qatar National Bank went ex-dividend. Abu Dhabi was up, however, 0.56%. We move it now to Wall Street, where the stock index futures rose sharply ahead of Monday's open, building up the gains seen in the previous U.S. trading session and from markets overseas. Around 6 a.m. Eastern Time, Dow futures were indicating the industrial average will rise about 280 points at the open. The Nasdaq and S&P 500 futures also indicated a strong start to Monday's session. The movement seen in U.S. futures come on the back of a strong finish seen last Friday and solid trading sessions seen in both Europe and Asia on Monday. Corporate earnings will continue to trickle in during the trading day, with Restaurant Brands International, Bright House Financial and FMC being just a handful of names set to report financial figures. On the data front, the U.S. monthly Treasury statement is due out at 2 p.m. Eastern Time. Investors will also be awaiting news coming out of the U.S., where President Donald Trump is expected to unveil a $200 billion infrastructure plan. Now, the plan is set to face criticism from Democrats in Congress, who argue that it doesn't offer as much funding as desired. In Asia now, markets closed mostly higher today after Wall Street's Friday rebound. South Korea's Kospi advanced 0.91%, with heavily weighted technology stocks higher on the day. Over in Australia, the S&P ASX 200 shed 0.3% to close at 5,820.70 as earnings season continued. Greater China markets traded in positive territory in what will be a holiday-shortened trading week after taking a beating last week. Hong Kong's Hang Seng Index advanced 0.52%. On the mainland, the Shanghai Composite tacked on 0.76%, and the Shenzhen Composite surged 2.65% to end at 1,723.73 points. And in Europe, equities were sharply higher in early trade as global markets rebounded after posting their worst week in years. Investors are also set to focus on earnings report. Let's talk to Ulrich Bartz, my colleague at the Frankfurt Stock Exchange. Hello, Ulrich. Good afternoon. Good to have you on the show. Beautiful week.
Yeah.
So tell me, how much has calm returned to the market after last week's sell-off?
Well, the share prices are going up. That shows that it doesn't just go down, and that there's some measure of courage in the market, but the shares are not going through the roof. It's a very careful recovery, and the people, I think, are still wary of what might still happen this week. I don't think anybody is ready to say they've digested the shock of the market crashing that way over several days. Not a crash on any one day, but accumulated, you can call it that. The question of rates going up, keeping up with inflation, are the central banks going to keep up with inflation in adapting their interest rates, and how will this affect the economy? I think these are questions that have gotten a new urgency through the events of the last week, and people are dealing with that. When you talk to the people in the market, when the microphone's on, they have very optimistic tones, and they say, oh, the fundamentals are good, the broad support for the economy and for equities. But when the microphone's off, yes, there is nervousness, and yes, 2018 will be more volatile than 2017.
Okay, let's look across the Atlantic, looking at the U.S., where President Donald Trump is set to unveil a new $200 billion infrastructure plan. Now, is this a game-changing news for investors, and why?
I think it's not a game-changing news at the moment. It was a game-changer when he announced it in his run for the presidency and at the beginning of his presidency. But the people in the market have been waiting for infrastructure spending and details on this ever since he went into the Oval Office. And that enormous share price rise on Wall Street, the Dow gaining 30%, and here the DAX also gaining many percent, and European shares going up. All around the world, people profiting from the expectancy that the U.S. economy would turn at a higher rate than it did before, based on tax reform, which now the president has acted on, and infrastructure spending. I think a lot of the reception that the details he will be giving are going to have on the market will depend on how he explains the financing part of it, because there's always two sides of the coin. Spending, great, companies profit, but who pays for it?
All right, thank you very much for your time, Ulrich. Do enjoy the rest of the day.